All right, it is Sunday, August 10th, and we are doing weekend market update. It's that time of the week again. Hope everyone had a great week. We're going to cover Bitcoin in the high time frame. We're going to cover SPX denominated in M2. We're going to look at yields. We're going to look at the dollar, and then we're going to call it a day. Uh, I think the best way for me to frame up what's going on now in markets is best expressed as it kind of always has been, right? With Bitcoin. It's why it's the first thing that I typically cover. It's why the high time frame chart here has always kind of ruled. It's why, when we dipped down to in April 74, 75,000, we were calling this, the most bullish chart in finance because it was, objectively speaking, anytime you see a structure that appears in a formation such as what I'm displaying here, and that is in all essence, a 3-4 year reaccumulation event with one, two, three clear legs kind of on the first half of things, and then on the second half of things, the second half of your reaccumulation, you have very clear structures that show you a test in terms of an uptrend of the 30-week. You get a last point of support, consolidation. This lasted, over 200 days. We kind of jump that creek, get up to new all-time high, and then we consolidate here in what's called kind of the sign of strength back to a last point of support area, which we did for another 200 days. And really it entered expansion back in November of 2024. That's when the expansion phase of this market happened. And since then, you have to, when you're in an expansive period in a market, especially on a high time frame, and all the signals are telling us that it's expansion, right? The green Ichimoku cloud sloping upwards, a 30-week sloping upwards. The onus is always on two things. It's number one, it's what's the feeling in the market at the time, and how does it relate? How does it transpose itself with the structure that we're looking at? And back here, it was the opposite. Okay. Sentiment was double top. Trump tariffs started the bear market, yet the structure was telling us that's the opposite of what's unfolding. It's the opposite. And so far, we've seen that. What we also have to keep in mind is the consolidations as we get further into expansion should be getting shorter and shorter and shorter. And what does that mean? So we got up to in November 97 and all the way up to 108 and essentially consolidated in a corrective fashion for what, 140 days before it came back to that area. The next consolidation we saw was from May to basically end of June. That one was 42 days. The one we're in right now from July 7th till today, 28 days. And so these things should be getting shorter and shorter. That's how we have to be thinking about things because of where we are structurally. Looking at the power behind this move, we've got this bearish divergence playing out, which is what I want to see, right? With one hit on RSI coming back up. We haven't hit it again, and this thing is just coiling here. Coiling, 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 gathering energy to what I believe is going to propel Bitcoin to 170, 220 before the end of the year in this next move. And very similar from a structural standpoint to what point in time? Well, let's go back and look at our last major reaccumulation event with Bitcoin. And that was from January 2018 all the way to October of 2020, where again, a reaccumulation structure where you have an A, B, kind of C wave on the first half of the accumulation. You have this one moved out much quicker, right? But it was too soon, and we got an LPS test, and then to work back up to SOS, LPS, very similar to what we're seeing today on RSI, right? One touch, two touches, and then it broke out. This is where the big move happened. This is kind of where I'm contending we are right now, okay? Right now. And what followed that move with the release of energy and the release of this macro reaccumulation was a 5x move in Bitcoin. The difference is this. The difference is today, the market participants are much more guarded, cautious, worried. I keep hearing about tops, selling the top before the big bear market, 4-year cycle. And that's not normal. That's not normal in what you would expect to experience here when the talk back here was super cycle. Okay. Super cycle, 3, 4, 5, 600, $700,000 target, maybe not 700,000, but we had a lot of $400,000 and $300,000 Bitcoin targets. Here, it's the opposite, where there was a lot of euphoria in the markets all the way up here. There isn't a lot of euphoria and froth, in my opinion, where we are today. It's the opposite. And so that just tells me the market's setting up for a surprise to the upside. And everything else I'm looking at kind of confirms that, right? When we look at SPX M2, again, this was some of the analysis that gave me again, confluence and confidence back in April that we were doing nothing more than a test. The slingshot was being pulled back prior to the most explosive move. If we look at this monthly chart going back to 2018, same concept, right? Reaccumulation in the form of an ABC, the first half of the move, impulse coming out in terms of a flat correction. And then we broke out and literally retested the entire reaccumulation structure that goes back 20 plus years. And so the expectation was a V-shaped recovery, and now we've exceeded the previous all-time high denominated in M2. And this is the analogy here is you just pulled the slingshot back, it got released, and now it's back to the origin of where it was pulled back. Does it stop there? Is the velocity at that point expected to sputter? No. The energy is expected to go way past, right? Where you pull, let's say you had a rock right here, right? You pull it back, you release it. Does the rock just sputter right here? No, it goes equal to, if not greater than, the distance from which you pulled it back. That's the analogy that we have to use in financial markets. That's the analogy I'm using where we are here right now. Okay. So I'm expecting steep continuation from where we are. It should be volatile, much like we saw the last time this setup presented itself back in October of 1996, where you eclipsed the local all-time high. And what did you see here? You saw an incredible move, volatility along the way for sure. And so that's the look. SPX M2 for continuation. Yield support it. Again, I've been saying this is a very bearish structure. It's been bearish. This is, in my opinion, and again, just a reminder, I'm not a financial advisor. Don't take what I'm saying as financial advice. I'm here to give you my perspective and my conviction. I could be right. I could be wrong, as always. Things I talk about could go up. They could go down. They could go sideways. And much like yields, I've been saying, are set up for a big move down for the last several months, and we've pretty much been going sideways, right? However, there's a lot of clues in here as to the next direction. And that is the overlapping. I continuously say the overlapping of price action. This is all corrective. There's nothing impulsive in here. Around a 30-week that is now starting to slope down. In the Ichimoku cloud, a big move is coming down on yields, a big one, and it's imminent. That could mean this week, that could mean next week, that could mean next month, but there's a markdown coming, and that's going to be supportive of risk assets. The dollar is telling me the same exact thing. We've been saying since this deviation up here, I've been calling this a deviation back in January, expecting a major markdown. We got it. And I said around this area, you can expect some consolidation and checking back like we talked about with oil, doing that same thing, checkbacks. We've had this a second check back now. This looks like it's ready to mark down again. And that's going to be very supportive, in my opinion, of risk assets. So, folks, that's it. That's a quick weekend market update. I hope you enjoyed that. Have a great rest of your weekend. Take care.